Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and risk management. I'm your host, Louis, and I'm excited to have you join us today. We've got a packed show for you with some interesting stories and insights from the financial markets. First up, let's take a look at the latest news from Shriram Transport Finance. The company has reported a net profit of 14 crores for the quarter ended June 2024, which is an increase of 24% compared to the same period last year. This is certainly a positive sign for the company, and we'll be keeping an eye on its performance in the coming quarters. Next, we have Aditya Infotech Limited, a leading player in video security and surveillance solutions in India. The company's IPO is set to open on July 29th with a price band of 675 per share. The issue has been assigned a subscribe for long-term rating by brokerage firm Bide Broking, citing the company's consistent growth over the last 3 financial years. With its wide range of products and solutions, including smart home IoT cameras and AI-powered surveillance systems, Aditya Infotech is certainly an interesting player in the tech space. Now, we know that IPOs can be a great way to get in on the ground floor of a growing company, but it's also important to do your research and consider all the factors before making a decision. We'll be keeping an eye on Aditya Infotech's performance and bringing you updates as more information becomes available. Finally, let's take a quick look at the market trends. The Sensex and Nifty have been volatile in recent days, with investors reacting to news from around the world. It's a reminder that investing in the stock market always involves some level of risk, and it's essential to have a well-thought-out strategy in place. That's all for now. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, my friends. I hope you're all doing fantastically well today. We've got a real treat for you in this middle segment as we dive into the world of bonds and the Federal Reserve. Now, I know what you're thinking. Louis, why should I care about bond traders and Fed meetings? Well, my curious companions, let me tell you. These folks are the masters of the financial universe, and their actions can have a profound impact on your investments and the overall economy. As we speak, bond investors are eagerly awaiting the latest Treasury view on quarterly debt sales, a Federal Reserve meeting, and a slew of data releases, including the all-important July jobs report. It's going to be a wild ride, folks. With only 4 trading days left in July, the Treasuries market is on course for only its second negative month this year. That's right. Yields are rising across all maturities, and investors are reducing their rate cut expectations. Now, I know some of you might be thinking, but Louis, what about the bills at Bessent's Treasury? My friends, that's a great question. Since Scott Bessent took the helm in January, bond dealers have done a complete about-face on his issuance strategy. Initially, everyone was wondering how quickly he'd ramp up sales of longer-term securities, but now it seems that bills are where it's at. As Chris Anstey from Bloomberg so astutely put it, it's all about bills at Bessent's Treasury. And I must say I agree. The focus has shifted from long-term securities to shorter-term bills, and that's a significant development in the $29 trillion market for U.S. Treasuries. But wait, there's more. This week is shaping up to be a crucial one for stocks as well. With the Fed meeting and jobs report looming, Wall Street pros are staring down a pivotal week that will likely set the tone for the rest of the year. As Alexandra Semenova, Michael McKenzie, and Phil Serafino from Bloomberg noted, the big event comes Wednesday, when the Federal Reserve announces the outcome of its 2-day policy meeting. Economists expect the Federal Open Market Committee to keep interest rates unchanged, but you never know what might happen, do you? So, my friends, there you have it, a whirlwind tour of the bond market and the Fed. It's a complex and fascinating world, full of intrigue and uncertainty. But don't worry, we've got your back here at the Riskwiser Zone. We'll keep you informed and up to date on all the latest developments. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. Today, we've been discussing the intricacies of market trends and the importance of informed investment decision. As we close out this episode, I'd like to shift our focus to a recent interview with Davina Mehra, a renowned expert in the field of finance. Mehra's insights offer a unique perspective on the current state of the market, emphasizing the need for investors to remain vigilant and adaptable. She highlights the evolving nature of the market, where stocks that led one bull market are rarely the same ones that lead the next. This notion is crucial for investors to understand, as it underscores the importance of ongoing portfolio evaluation and adjustment. One key takeaway from Mehra's interview is the concept of survivorship bias. This refers to the tendency to focus on successful investments while overlooking those that have failed. Mehra illustrates this point by citing examples of once prominent companies that have since faded into obscurity, such as DSQ Software and Pentamedia. In terms of managing risk amid global uncertainty and lackluster domestic earnings, Mehra advises investors to adopt a balanced approach. She suggests that good investing is often boring and involves sticking to a well-thought-out strategy, rather than making impulsive decisions based on short-term market fluctuation. Mehra also touches on the potential impact of tariffs and trade negotiations on the market. While these factors can introduce uncertainty, she believes that Indian households may benefit from decreased prices for essentials like food and oil. This, in turn, could lead to increased consumer spending and improved economic growth. As we consider Mehra's insights, it's essential to maintain a nuanced perspective. Investors should be aware of the potential risks and rewards associated with various market trends and make informed decisions based on their individual financial goals and risk tolerance. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.